What is up, guys? Welcome back to another video. Today, we're going to talk a little bit about top-down analysis. A lot of questions I get often in the mentorship and in messages is how to get the daily bias. Now, this is something that you're not going to get perfect all the time. You might get caught on the wrong side of the market. You're going to have losing days. It's just part of the journey, right? But with the right psychology, the right risk management, and the right strategy, it's just a matter of repetition, back testing, practicing, forward testing, and just continuing to get better and better and better and practicing this over and over again. Okay. So what you want to do is we're going to start on the weekly chart. Okay. This gives us our macro on the higher time frame and our perspective. So what we're looking for is we're looking for gaps, inefficiencies, imbalances, um, equal highs, equal lows, old highs, old lows, right? Um, on the weekly time frame. So if you notice, we have a gap here, almost relative equal lows here, old swing highs here, old high here, old low here. So you want to try to think about from the weekly time frame, where is price most likely to expand to, right? So we unhide, excuse me, uncheck these. You can see here we have this weekly gap. And then we also have some lows here. Then we drop down to the daily. Okay. Now the daily chart allows us to zero in on the economic zero in and pair it with the economic calendar, right? For a medium or high impact news driver. So we're going to mix that with time of day, which is your manipulation. And then we're going to wait after that initial manipulation for an imbalance to form. There will be some displacement. The FVG or the fair value gap will form. What time? Well, you have three sessions that'll happen in. You have London from 3 to 4 a.m. And then you have New York session 10 to 11 a.m. And then the PM New York session from 2 to 3 p.m. And an added bonus, we have that 3 to 4 last hour. Okay. So news is your manipulation or the Judas swing. Okay. So once we zero in on the daily chart here, we can see we have this weekly gap above us, we have a daily gap above us, and then we also have this swing high, swing low here. So what I like to do after I mark out any imbalances, like this gap, um, we also have this gap here. We've filled 50% here, respected, and haven't gone above yet. So what you want to do also is make sure that you note everything on its respective time frame so that you know where you're at when it comes to price. Because then you can just pair it with time. And those are our two most important elements, time and price, right? But what I like to do on the daily chart is plot out the previous day's high and low. Okay, so if we're trading on this Friday, we want the previous day's high and the previous daily candle's low. Okay, so then we'll go down to the 4 hour and we'll just mark out market structure, right? So market structure projections are going to be like our low hanging fruit. So you can see here we have these relative equal lows on the 4 hour that line up with the previous day's low. And then if you look here on the 4 hour, just Friday morning, near London Open, we had the previous day's high taken out. So buy side liquidity was taken here and we shifted lower on the 4 hour. So you would want to mark off any PD rays that you see here as well. I personally like to go from the weekly to the daily to the 1 hour. Okay. So you can see here, um, if you were in London just before 3 a.m. here, you can see that we have the previous day's high lining up with relatively equal highs. So this is your buy side liquidity, right? On the higher time frame here. Wow, that's butchered. Liquidity here on the higher time frame buy side. So if you were trading in London, the London silver bullet here from 3 to 4 a.m. We drop down to the 15-minute, right? And we're just waiting. You can see relative equal highs. So we will look below. We have these relative equal lows here on the 15 as a swing prediction. So then this would be a form of sell side liquidity. So with that being said, what are we anticipating here? Are we anticipating to take buys or are we anticipating to take sells? Right. So now that we've worked our way down from the weekly to the daily to the 1 hour and 15, we can see that from the daily time frame, the previous day's high and the previous day's low, we're near the previous day high, right? So if we play price forward, we see we sweep into this buy side liquidity in the form of these relatively equal highs here. When we drop down to the 5-minute, this is the 2022 mentorship model idea, right? So buy side is taken. So once buy side is taken, we're looking for a shift in market structure, a displacement, fair value gap, and then a return into that fair value gap for an entry. So let's play price forward. So now that we're in that 3 to 4 a.m. window, let me get rid of this so we can see price here. So what we can do is start to drop down time frames from the 5 to see if we get some sort of displacement and market structure shift. So you can see here on the 2-minute, we have a fair value gap being formed there. And on the 1-minute, we have some displacement there, down, and a tap just back in there. Play price forward. There's your return in off of this 2-minute here. So this would be your short position. Our target or stop loss would be 5 handles. And our first target would be 5 handles. Okay. This would be five. And then this would be 10. Okay. Now, if you note here, our sell side is all the way down here. Do we need to swing for the fences? No, we don't. We just need low hanging fruit, right? So what we can do is this will be a TP1, right? Close to these relative equal lows. We also have a fair value gap on the 2-minute as a target as well here. And relatively equal lows here, which also line up with these lows here. We move this across. Right, so there's your sell side. Your next sell side being over here We have some more equal lows over here. Okay. So we play price forward here. One more tap in. Oh, stopped out. Okay. So let's see here. 3 to 4. So buy side's taken again. We get a shift in market structure there. We can enter here. Their stops at 5. Targeting sell side here. Let's go 10. Where's 10? Or just below these lows here. Okay. Halfway will be about 5. Oh, here's 5 handles there. Again, even though we got stopped out on the first one, I would re-enter here on this one again. Okay, so there's your 5 there. Go stops to break even. Pay yourself partials. And then there's your 10. So even though we take -1R, we make +2R here. So +1. Okay, so there's London. Your kill zone in London being from 3 a.m. to 5 a.m. Okay, so this is your London kill zone. Okay, so let's move forward. So move forward to New York. 5 minute here. Okay, again, we want to see where our bearings are. So here we have this 1 hour fair value gap. So we want to make sure that we keep track of where we are. 1 hour fair value gap. Okay, 5 minute coming into our 10 to 11 silver bullet. Okay, we've slightly tapped sell side, but our major draw on liquidity is this 1 hour. It's just a higher time frame draw on liquidity. So I like to do the 1 minute. So I will stick in here. Okay, we've already taken buy side in London here and dropped lower. So next would be sell side. We swept slightly here on from these, but or now you can see we have these relatively equal lows. So this one from 12 p.m. and this one to there. So this is our next swing low is 850 low as a sell side with the idea of this fair value gap on the hourly. Okay, so now we're going to be looking. And we're just going to get this out of the way so we can see here. We're going to be looking for a sell opportunity because our bias is towards that 1 hour fair value gap. So we see the highs get swept again. Okay. So let's see, do we get displacement? There's some displacement there. Get this run. Okay, so there's some displacement there. See how these are bigger, much bigger candles here? So I would be looking for something in here to take it down. We go on 2 minute, we can use this if this candle closes. Okay, so now be looking to take this short, stops 5. First TP 5, second TP 10. So let's see if we get a return. No return. So at this point, we could look to see if we can get a continuation entry here on this gap. There's your 5 there. So you can take partials. And once we drop below, cover your 5 here. And as you can see, this 1 hour lines up perfectly with our 10. So it gives us enough range to go to reach. So at this point, I would look to want to cover your position or get out at 5 because we're getting ready to run into the 11 a.m. So you can move your stops, cover your position there, or go break even. If it takes you out, it takes you out, right? But we hit take profit there. Okay, so there's another 2R. So if you traded it in the morning in London and this one in the morning, that's what 4 RR and minus 1R. So 3 RR or up 3% for the day. So that's how I do my top down analysis from the weekly, daily, 1 hour, 15, and then go from the 5 down into the silver bullet windows. Okay. This is what we do live on the Discord Tuesday through Thursdays. Um, you know, but you're going to have losing trades. You're going to have times where like we got stopped out up here during London, right? So that's okay. I know that I still have confidence in the concepts, in the strategy that once it sets up again, I'm taking an entry again and winning back my -1 position. Okay. So with that being said, thank you guys for watching. Don't forget to hit the like, comment down below. All my links are down in the description if you're interested in more information on the Discord or coaching and stuff like that. So until next time, guys, I appreciate it and trade safe.